Hello everyone, my name is Mohammed Aljaber, and in this video we're going to walk through exercise 6-2A of our Managerial Accounting course. Let's read the question together. Kilgore Company makes and sells a single product. Kilgore incurred the following costs in its most recent fiscal year. And then they're providing you with a table with cost items appearing on the income statement. Kilgore could purchase the products that it currently makes, basically outsourcing their production. If it purchased the items, the company would continue to sell them using its own logo, advertising program, and sales staff. Now, this important line right here is relevant to our question, and you're going to see how it's relevant in a short bit. Now, what is required? Required, identify each cost as relevant or irrelevant to the outsourcing decision and indicate whether the cost is fixed or variable relative to the number of products manufactured and sold. Now, I already went ahead and prepared a list of all our cost items in the first column, as you can see here, and then a second column where we're gonna decide whether the cost is relevant or irrelevant, and in the third column we're gonna decide whether the cost is fixed or a variable cost. I also went ahead and numbered each cost item just to make sure that I have copied all of them. So let's count them quickly together. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, which matches my list right here. So we're good to go. So let's read them one by one and decide if they are relevant or irrelevant, and also decide whether they are a fixed cost or a variable cost. First one, materials costs, which is $7 per unit. Of course, if Kilgore decides to outsource the production, they are not going to incur these particular expenses, which is the direct material costs in this scenario, right? So that makes this first cost item definitely relevant. Now, is it a fixed cost or a variable cost? Because it's $7 per unit, that definitely makes it a variable cost, because the more Kilgore produces, the more that direct material cost is going to increase. So that makes it a variable cost. Second one, company president's salary. Now, whether Kilgore company decides to produce that product itself in-house or outsource it, the president is still going to get his pay, right? He's still going to collect his monthly salary or annual salary, whatever, right? So to this specific decision, whether to internalize the production or to outsource it, the company's president's salary is irrelevant. Is it a fixed cost or a variable cost? No matter how much output Kilgore produces, that president's salary is going to be the same, so it is a fixed cost. Next one, depreciation on manufacturing equipment. The manufacturing equipment, whether they use them or they don't use them, they're still going to depreciate the same, right? So for the purpose of this decision, whether to produce in-house or outsource, this piece of cost item right here is irrelevant. Is the depreciation a fixed cost or a variable cost? Again, always ask yourself the question, is that cost going to increase the more we produce, or is it going to be the same? If it's going to be the same, then it's a fixed cost. If it's going to increase directly in relation to the level of output or the level of production, meaning the more we produce, the more that cost is going to increase, then it's going to be a variable cost. So in this case, the depreciation is just going to stay the same regardless of how many units we produce. So it is a fixed cost. So you get the point. Let's go over the rest. Number 4, customer billing costs, 1% of each sale. Okay. Now going back to this line right here, where I said that this piece of information is gonna be important later on. It says the company would continue to sell them using its own logo, advertising program, and sales staff, right? So in this scenario, the customer billing costs, they're still going to send customers the bills, and that cost is still going to be incurred, regardless if they produce the products in-house or outsource it, right? And since it's going to be the same under both scenarios, that makes it an irrelevant cost. Remember, the way to decide if the cost is relevant or irrelevant is to determine whether it was an avoidable cost or not. And since this cost is not avoidable under both scenarios, then that makes it irrelevant. Now, of course, is it fixed or variable? Because it's 1% of each sale, that makes it a variable cost. The more they sell, the more they're going to incur this cost. So say variable cost. Number 5, rental cost of manufacturing facility. Here, if they produce in-house, they're going to need a manufacturing facility. But if they outsource the production to another company or to another entity, they're no longer going to need the manufacturing facility. So they're most likely going to stop renting that manufacturing facility. So based on that, this makes this specific cost item a relevant cost because it is an avoidable cost, meaning that if they outsource, they can avoid having to incur this particular cost. Is it a fixed cost or a variable cost? Rental is always a fixed cost because it's not affected by the number of units that are produced by the business. Number 6, advertising costs, $200,000 per year. Again, going back to this line right here, they're still going to be using their advertising program. That means that either whether they produce in-house or outsource, they're still going to spend on advertising, right? So that makes this cost irrelevant. Is it a fixed cost or a variable cost? It's definitely a fixed cost because, as you can see here, it says $200,000 per year. So that cost is going to be the same regardless of how many units they actually sell. So it's a fixed cost. Number 7, labor costs, $8 per unit. Now, of course, labor costs here are the direct labor, like the amount of wages that is paid out to the employees who work on producing the product itself. And since they are going to outsource, and if they decide to outsource, they're not going to have to incur this cost. So it is an avoidable cost, which makes it a relevant cost. Is it fixed or variable? Because it says per unit, it's definitely a variable cost. The more they produce, the more they're going to have to use workers, and the more they have these workers working, of course, they're going to have to pay them, right? So it is directly linked to the level of output or the number of units that is produced by the business. Next, number 8, sales commissions, 1.5% of sale. Now this here, again, going back to this right here, this sentence that I have highlighted, they are still going to use the same sales staff regardless if they decide to outsource or not. So that makes this particular information irrelevant because it's not going to change under both scenarios. It's going to stay the same. Is it a fixed or a variable cost? Because it's 1.5% of each sale, that makes it a variable cost. Number 9, salaries of administrative personnel. It's not going to change. These are administrative personnel who work in the administration, whether they decide to produce in-house or outsource, they're still going to be needing those administrative personnel. It's still going to be paid. So that information is irrelevant. Is it a variable cost or a fixed cost? It is a fixed cost. Why? Because let's say the salaries of administrative personnel is adds up to, let's say, $100,000 per month or per year or whatever. If they produce 100 units or produce 10,000 units, these people are still going to be paid the same amount. That cost is not going to change or correlate directly to the level of production. Number 10, shipping and handling. Shipping and handling here is irrelevant because if they produce in-house or outsource, they're still gonna need to incur these costs, right? So this is irrelevant. Is it a fixed or a variable cost? Again, because we can see here clearly 50 cents per unit, that makes it a variable cost. Number 11, depreciation on office furniture. This is also an irrelevant cost because it's unavoidable. We're still going to have to incur it, whether we decide to produce in-house or outsource. Is it a fixed or a variable cost? It is a fixed cost. Manufacturing supplies, 25 cents per unit. Is it relevant or irrelevant? If we decide to outsource, we're not going to have to incur these 25 cents per unit of manufacturing supplies. So that makes this a relevant cost because it's avoidable. Is it variable or fixed? It's definitely a variable cost. Last one, number 13, production supervisor's salary. Now, the production supervisor's salary is a little bit different from the other employees we have talked about earlier because this guy is in charge of production, right? He is a supervisor, so typically in managerial accounting terms, out of the manufacturing costs, he's going to be classified as a manufacturing overhead cost because he's not directly on the production line or the assembly line, but he works in production nevertheless. So if we decide to outsource our production somewhere else, we're no longer gonna need this poor gentleman right here, right? So that means his salary is an avoidable cost. We can eliminate it if we decide to outsource. So this makes this particular cost a relevant cost. And again, because it's a salary, it's the same regardless of the level of production. That makes this a fixed cost. And that's it for this exercise. I hope you found this video useful, and I'll see you in the next one. Take care.